Hey everybody, hope you are having a wonderful St. Patrick's Day. I was super proud of myself. I remembered to dress the little one in green today. Took a text from my husband, but at least we got it done. But excited for the weekend. For those of you who don't know, we're here in North Texas and we went from almost 80 degrees yesterday to 40 today. So it's been quite a journey with our weather. Speaking of journey, what's going on in the news in the banking industry right now is probably front and center on everyone's minds. I'm not going to spend too much time talking about that today, but what I am going to do is give you a lot of knowledge on what's happening in the market, looking at a broader view of the United States market as a whole, which really doesn't exist, but a little foreshadowing to what we're going to talk about there, but also what we are seeing here in our market in North Texas. So before I get started, a lot of you are newer, and so just a little bit of background. We do educational classes this time of year, either every week or every other week, depending. And we've kicked forward our event schedule. And so each time we do one of these, I'll let you know what opportunities we have upcoming. And of course, if you're watching this after the fact and whatever event it is already passed, you can always reach out and we can let you know what's upcoming. Next week, our webinar is going to be on 1031 exchanges, and we're going to look at how these work and how I've personally utilized them in my own portfolio to build my own real estate wealth. Certainly, we could not do what we do without it. They're an amazing tool and they're much, much easier than what many beginners think. And so I'm going to talk to you about kind of what the rules are, what parameters you have to fall within, how to properly complete one, and then if you want to be really crazy like me, how to really help it propel you to the next level using some of the loopholes that exist. For those of you who don't know background, my husband and I are middle school sweethearts, both born and raised here in North Texas. We have 4 adopted children. We speak all over the United States. For those of you that are here local or coming in, I hope that I'm going to see you next week at IMN. My panel is on Tuesday morning, but we certainly are all over the country speaking. And so you can find our upcoming events on our website, and I'll give you the social links where you can find all of that as well. My husband and I own a multitude of businesses, and obviously we have our main primary business as our real estate investments. And then our company, OmniKey Realty, which is a real estate investment and management firm based here in North Texas, also covering South Oklahoma. We personally own over 40 million in real estate, so I'd like to think we have a little bit of an idea about what we're doing. And certainly we also believe in giving back to the community that has made all of this possible for us and all the blessings that we've had in our lives. So if you don't know much about us, you can certainly go to the website, read a little bit more about us. We're unique, and our model is unique. And so one of the things that I'm going to focus really heavy on the next few months, especially in the market that we're in right now, is helping you understand how we did what we did. And a lot of what we did was in markets that looked just like what we're looking at right now. So without further ado, a lot of what we offer bases around education. And that's really important to us because there's so many different ways to make money in real estate and investing in general. And so for me, it's about making sure that people know what we do believe in, what we don't believe in. I did an interview with Kathy Fettke this morning on the radio talking about how I've been very bullish and very against apartments for many, many years, and how 2 years ago, everybody kind of thought I was crazy talking about how there were going to be capital calls and rates skyrocketing and all these bridge loans were going to be a nightmare and don't buy 2 caps. Unfortunately, most of what I predicted is now coming true. And again, it goes back to there's many different ways to make money in this business. Everyone has a model that works for them and that they believe works for others. Mine is the best for me. It may not be the best for you. And so the more that you can educate yourself with me and people like me, the better that you're going to be able to make decisions that are going to work for you in your investment journey. And this is why we have stuck with and kept our education free, because it's so paramount to us that you have an idea of what we do and how we did it, so that you can either come to us and we're going to help you do it, or you can go do it on your own, at least armed with the information that we feel you need. One of the things I talk about a lot is that we are one tool in your toolbox. And of course, when I do my disclaimer in a minute, I'm going to remind you of that. We are just one step on your journey, and our goal is to be a big piece of that journey and to handhold you. But there are tons of experts that we're going to bring to you. Certainly, we bring many at our events, and that is to make sure that you are set up to succeed as much as possible and make decisions despite what market conditions are, and also to understand the differences between the markets, because what's happening in one place is not what's happening in another. So our next upcoming conference is April 14th to 16th. Our one last month sold out completely with a wait list that was over 100 people. So we went bigger and better this time. So our conference on the 14th is completely free. If you want to join us for lunch at the hotel, it's $35, or there's tons of restaurants for that hour lunch period you can go get. Our after dinner party is going to be from 6 to 9 p.m. that night. Our bus tour will be on the 15th. That's sold out as well. We actually had to add a second bus. We hope to see you there. We'll be looking at exclusive off-market opportunities and in my top markets. And I'm going to show you a couple of those at the end so you can get a feel for what type of investments we're doing. But you also, it gives you an opportunity to see the areas that we recommend, the areas that I'm personally buying my portfolio in, and also where our real estate investment fund is buying property. If nothing else, it's a great way to learn what's happening here in North Texas and why we believe our market is so resilient. And then on Sunday, we've actually added a mastermind. I've been asked to do these for a long time, and I've been real hesitant, honestly, mostly because it's really hard to give up an entire weekend when you've got a young kid at home. However, there are a lot of people sitting on properties with massive amounts of equity who really want to do what we've done and take it to the next level. And one of the ways that we do that is by looking at your portfolio property by property, making recommendations on what you should do, what options you have, whether 1031 makes sense, whether financing or cashing out makes sense, if maybe there's some type of bulk product we want to look at for you. And so this mastermind is going to be a great way to get one-on-one with me and Michael, but also to hear others that are on the same journey that you are. And so we've got some great people attending that, and we'll also have some education going on with that as well. We hope to see you there. This is limited to 12 people. We've already sold quite a bit. So if that's something that you're interested in, reach out, because I expect that that's probably going to sell out by end of next week. Dinner after party, QR code here. And of course, this will be sent out to you after the fact. And again, that is on the 14th from 6 to 9. And then information here on the mastermind, and that is on Sunday. So most of the people who are attending are flying in that morning before the event on Friday, and then flying out Sunday after 5. So on our website, you can find all of our education, and this webinar will be up there, but if you registered for it, you'll actually get an email on the back end with that information. And of course, we're on all the social media channels, most of which are way over my head. Those of you who know me personally, you know Facebook's it. That's all I do. But my team is wonderful, and they're great at doing all of that for us. So before I get started, here's my little spiel. Everything that I'm going to talk about today is my best opinion based on my years as an investor, as an agent, as someone who owns and operates a real estate investment and management firm, and just someone who's local to my market. What works for me may not work for you. We always recommend that you consult with those experts in your life, and certainly ones that we can connect you with who are going to help you on your journey. Everything that we talk about is based on what I think, what I feel, what I've seen, but I have no crystal ball. There are no guarantees. All investments, including real estate investments, although I do believe they are the safest, they do possess a potential for risk. And so do make sure that you're doing your due diligence and your research, not only on the market that you're working in, but also the people you're working with and the product that you're operating within. So let's talk about North Texas. Let's talk about what's happening here. And at the end of the day, the thing that I want to focus on the most is where we are today, because I'm going to talk a little bit about how we got where we are and what I think is coming. But really, most importantly, what we need to talk about, what's on everybody's mind, is what's happening right now. So the thing I want to start with, there's no nationwide real estate market. Hyper-local research is really the only way to get started on any real estate investing journey. You're going to hear things on the news like the market's crashing, the United States market softens, listings are down 50%. None of those things are actually accurate, because there is no nationwide real estate market. And no two metros are the same. Every area has different employers. It has different diversification of what employers locate are there, what different sectors they're in. How Dallas performs is completely different than how Austin performs, or how San Antonio, or how San Francisco or New York. And so it's really important that you're looking at your hyperlocal market. In addition to that, things as simple as airports, landlord laws, lease forms, state income taxes, relocation trends, all of this helps dictate how a market performs. And so it's really important that you're looking at the market as a whole so that you can really see what you're looking at instead of looking at this nationwide market that the news loves to talk about that truly does not exist. So just make sure you're keeping that in mind. And before I get into what we're going to talk about today, the last thing I want to tell you is we are a very, very unique market. And we are a very unique market because of a lot of these factors that I just told you about. And so what strategies we're going to talk about today and the things that we're seeing here in our market, specifically as it pertains to the strength of our housing supply shortage and our numbers. Keep in mind that's not happening everywhere. In fact, it's happening very few places. And so you just want to make sure that what we talk about today, do your research. It may or may not work anywhere else that you're going to be looking at. Now, I'm not going to talk a lot about inflation. I'm not going to talk a lot about what's going on and where I think things are going. You want to learn more about that, come attend my event. We talk about that a lot. But I am going to leave you with this. There is no greater hedge against inflation, in my opinion, than real estate. So if you look on the left here, this is the purchasing power of the dollar. What is the value of the US dollar? And on the right, what you're going to see is the value of real estate. And you'll notice it's almost complete opposites. And that is because you have a dollar in a bank account in 1970, and it's going to be worth a whole lot less today, almost 60 years later. You have a dollar in real estate, and that value has gone up significantly. And so one of the great ways to hedge against inflation is real estate. And historically, it's one of the things I talked with Kathy in my interview about this morning, real estate is one of the safest things that you can be in a recession. Now, of course, 2008 is the exception, but that wasn't a traditional recession, right? We caused that. We wrote anybody with a blood type a loan, and we didn't verify the information. And so we really kind of created that for ourselves, and it's quite impossible that something like that could happen again. But that's a conversation for another day. But I did want you just to see what we are looking at right now. So although what's happening with inflation and interest rates rising and all of this is scary to people that don't understand the background and how we got here. And for those of you who don't know, it's printing money. We put money into the marketplace, and the only way to get the money back out is to raise rates. Otherwise, inflation continues. And for those of you paying attention, I'm sure you know the government put a whole lot more money back in the market this last week, bailing out banks. And so balance sheet, if you haven't looked at the federal balance sheet, go take a look. You'll see we're kind of back on that same trajectory. So inflation's going to be here to stay. But at the end of the day, all of us as real estate investors, we are out here to find the investment journey and avenues that work for us and what's going to fit us best as we navigate what's happening right now. And I, as always, believe real estate is the best avenue in the right place. So let's talk about the housing shortage. And for a moment, we're not talking about North Texas, we're talking about the United States as a whole. So on the left here, I want you to see the number of new homes constructed below 1,400 feet. And on the right, I want you to see the percentage of new homes below 1,400 feet. And what you will find here is we are no longer building entry-level homes. Well, a lot of reasons for that. Mostly it's because there's more profit in bigger houses. But the problem is we're just not building enough homes to fill the needs of people who need rentals to live in. And this is also for homeowners, not just rentals. And so it's very important that we understand that this is a 50-year crisis in the making. Now, NAR, the National Association of Realtors, believes that the true underbuilding gap in real estate is closer to 5.5 to almost 7 million homes. Yep, and that's just since 2010, guys, just since 2010. So take a look at this map here. You'll see this chart going over what the completions are versus housing demand. And on the right here, you're going to see what our averages are. And what you'll basically see is we have a real problem in this country. And COVID didn't cause this problem. They like to tell you it did, but it didn't. It's been going on since I started in this industry. And the problem is that we just don't have enough homes. And the only way to add them is to build them. And we're not building them. We've tried to fill some of that need with apartments, luxury apartments, mind you, that are more expensive than most of the homes that we rent out. But the problem is COVID kind of did away with that because people don't want to live in dense housing. And more importantly, all those people who are relocating here, I'm going to talk to you about, they don't want to be in apartments. They came out of markets where dense housing is what they came from, and that's not what they want here. People come to Texas for big backyards, for pets, and for guns. Might be controversial, but it's the truth. And so at the end of the day, what we need are single family homes. What we need are 2 to 4 unit properties with backyards. And this is the nationwide numbers. Wait till I show you what's happening here in North Texas. So let's start by talking about the growth in North Texas. We are the most populated metro in Texas and in the South. We are the fastest growing metro in the United States. If you did not know that, pretty staggering numbers when you look at the growth we're going to talk about. Our population's almost doubled since 1990. We've grown almost 25% just since 2010. We're expected to be the third largest metro by the 2030s, and 21 of our cities grew more than 10% during the pandemic. That may not sound much, but remember, we're the fourth largest metro in the United States. When we grow 10%, that's massive. And we're just getting started. They're saying that we're going to have 3.5 million more people by 2045. 1.5 million of those are going to be in Collin County alone. Collin County, that's Plano, Frisco, those areas. Dallas County, however, is only going to get 750,000 people. So all of these people pretty much are going out to the suburbs. That's where the opportunity lies, and that's why we're seeing all this crazy growth. Now, this population growth is not new. This has been going on as long as I've been in the industry, which this will be, I guess, my 18th year, so quite some time. But I want you to see what that translates into for this growth. 927,000 single family units, 618,000 multifamily units. It's unfathomable what we need. It's even scarier when we look at the fact we're already in a housing shortage. There's a shortage in DFW of more than 85,000 homes. Our population grew over 21% from 2010 to 2020. Housing grew less than 16%. And most of us know those numbers have now plummeted. Only just over 48,000 homes started construction in 2022, down almost 17% from 2021. And in 22, December, end of year, we were down 34%. 34%. It's scary. And I don't want to scare you, especially those of you who live here, because at the end of the day, when my kids need a place, it's going to be very difficult. They're going to be really thankful mom and dad own a lot of rentals because the affordable housing market is absolutely decimated. New listings are down almost 26%. So how much worse is our housing shortage getting here in North Texas? Less than one single family permit is being issued for every 5 jobs we created in 2022. Think about that for a minute. One house for every 5 jobs created. And what no one's really talking about, we're about to have a ton of kids age into housing. So this is our change in population under 18. And you can see we are adding a lot of children. So 1 in 10 children in the United States, 1 in 10 under 18 live in Texas. Over a quarter of our population is under 18. I just talked about this at our event. I tried to find an article to cite talking about this. I found nothing. No one's talking about this because it's already scary enough with all the jobs coming here and people moving here. You start talking about 1 in 10 or 1 in 5 people are going to turn 18 and need a house in the next 10 years. Really scary. This is a housing crisis if I've ever seen one. And the problem is when we don't have enough houses, demand goes up and prices go up. You pair that with the fact that we are already significantly undervalued compared to the other top 4, top 5 metros. There's a lot of opportunity here in North Texas. Again, I have no crystal ball, but my money's where my mouth is. If I was looking at the 4th largest market in the United States with average home prices still under 400,000 when the next competitor is $1 million, that tells me there's potential for $600,000 in growth. That is why you see most investors flocking to DFW right now. So let's talk about market size because everybody always asks about, well, what makes Texas so strong? Why is North Texas so strong specifically? So we have over 70,000 businesses and over 10,000 corporate headquarters, 45 Fortune 1000 companies, over 2,500 companies with more than 100 employees quartered here, and 24 Fortune 500 companies. We just got number 24. DFW alone, just North Texas, is 2.7% of the country's GDP, and we had 3.1% growth last year. Everyone knows what last year was like, guys. That's incredible. If we were a sovereign nation, we would be the 20th largest economy in the world. No state or corporate income tax, pro-business climate, huge relocation base. We're going to talk about that and the incredible Texas Enterprise Fund. Now, for those of you who already own property here or you're considering buying here, you should be looking into the property tax reform that's going in front of our Congress right now. It looks like it's going to pass, and it is incredible opportunity for investors because what's going to happen is not only are people who are homeowners who are married and have children going to get significant property tax breaks, but the discussion is that hopefully they're going to be capping increases at 5% a year. So I'm not going to talk about that too much yet because it has not passed yet, but I do recommend you go look that up because that is just going to make even more people flock here. Now, you might be thinking, what is the Texas Enterprise Fund? If you're watching the news, you'll hear about it. Essentially, this is money that we incentivize companies to come here. And when we look at this, so these are region totals since 20 years ago, 2003. We've had almost 70 recipients. This is going up monthly. Total grant amount almost 315 million. And if you look at that North Texas region, it encompasses all of North Texas. And this is just some of the ones that have happened here in North Texas. And these are listed newest to oldest. Now, some are divided, but what I want you to look at is this. So this is the chart of where the money went. Look there at DFW. Pretty incredible. And this is in the millions, by the way, y'all. Really incredible. And this is going back to end of 2021. They haven't updated with the chart through 2023, and there have been 3 massive projects here with the Enterprise Fund. Of course, the largest single economic deal in the Enterprise Fund in Texas history was struck in Sherman, where most of you know I love Sherman and where my portfolio is. We're going to talk a little bit about that later with the expansion for Texas Instruments. So just hold that thought. We'll go back there in a moment. So talking about job gains in 2022, we made up 36% of all gains in Texas. We added more jobs than 46 other states in 2022. Now keep in mind, again, we are talking about North Texas here. We're not talking about Texas. We're talking about just DFW. So we added more jobs than 46 other states. Our employment growth is more than double the gain in pre-pandemic years and almost matching what it was in pandemic recovery, meaning all those jobs we lost, we had to add all those back quickly. We're still adding that many jobs. It is unbelievable, unbelievable, even for someone who lives here and works here. Total employment, we're over 10% of pre-pandemic levels, and our year-over-year jobs increased over 7%. We added a whopping 282,700 jobs last year. It's incredible. Unemployment rate is about 3.2% as of December. It continues to drop. That is what we consider virtual unemployment at 0. Now, so this is your 5-year net change on the top in employment year over year from December 2018 to 2022. You'll see Dallas leads the pack. And of course, when they say Dallas, of course, they're meaning DFW. And then current total employment as a percentage of pre-pandemic employment, again, you will see we lead the pack. There is no market that is performing like Dallas. To give you an idea of where these jobs are coming from, it's a little bit of everywhere. The news likes to make you think it's just California and New York, but it's not. It's a little bit of everywhere. And of course, you can see this mass concentration coming here. And this is just to give you an idea of the fact that this is not just because one market's doing poorly that their employers are coming here. This is a statement on what Texas represents, what North Texas represents. The business climate, the landlord climate, the operational climate, the tax climate. I could go on and on and on, but the bottom line is the businesses want to be here. Are certain states passing policies that make them want to come here more? Absolutely. But at the end of the day, they're coming here because it just makes sense. So Fortune 500 companies in North Texas, I've put some of them here for you. And at the bottom, I want you to pay attention to the cost of doing business index that was just updated. So this was end of, I believe, July 2022. So these numbers were as of August 1st. And I want you to look at these other top markets. So these are all of our competitors, which some of them are actually cheaper markets than us. I want you to look at the cost of living index. So New York, 255, Washington, D.C., 156, San Francisco, 191. You have to basically have $250,000 a year just to afford property there. DFW, 103.5. This is why these companies are coming here. Not only is the cost of living so low, but look at the cost of doing business. Look at what it costs to operate in San Francisco. Look at what it costs to operate in New York. Look at what it costs to operate, and look at DFW. The other piece that makes DFW so resilient is its employment diversity. So this is the pie chart of employers here. And when we talk about my favorite market and a little bit in the update there, I want you to look at that pie chart, because typically when you look in the inner cities, you might see something that looks a little similar to this, not quite as diverse. But when you get out into suburbs, it doesn't look like this. You may have 1 or 2 major employers. And so the pie chart gets weaker and weaker. Total opposite here in North Texas, because anyone who knows our market knows the majority of the jobs are going to the suburbs. We are a very unique layout. Our market is not the same. People are not trying to get into the city. They're trying to get out of the city. That's why DFW has gain everywhere. The suburbs are going up, but the inner cities are going down. Population actually lost. And so it's very interesting to look at the dynamic here, and that has to do with our highway system. And I'll talk to you a little bit about that when we look at growth. But the takeaway from this is look how diverse our economy is. There's not just one sector that's driving all the growth. If we'd looked at Houston back in 2007 before the crash, this pie chart would have looked completely different than what DFW looks like. Now, What really has started the last 2 years, really the last 6 months, is this tech boom and Silicon Prairie, as we're being coined. I've heard a couple different names thrown out, but I'm going to stick with that one because I like it the best. So what people don't realize is we are becoming the new Silicon Valley, and it's not just a slow thing that just started up in Grayson County. It's been going on. So I want you to look at this gain in jobs in this tech sector. So we have the second most high-tech jobs added since 2016 among US metros, more than twice as many as Austin, the fifth highest concentration of high-tech workers in the United States, the second most computer-related jobs added since 2016, the fifth highest concentration of computer-related workers, and the most affordable and least costly place to do business among tech hubs. This is a huge one, but one thing it doesn't talk about is the natural resources that allow these tech companies to operate. I get asked a lot about the silicone manufacturing and what's happening in Grayson County, and so many people don't realize it's water. It's water. So few places have the water to manufacture them, and yet we do here in Grayson County. And again, the business climate, the way that we operate for business structures, tax incentives, yeah, they're all important, but you kind of have to have the natural resources to make it too. And luckily here in North Texas, we have that in abundance. Now, you would think with all these higher payer jobs coming in that we would have a high cost of living, but in reality, we don't. So first, let's talk about the average income. So 49.27% of the jobs coming here earn more than $150,000 a year. That's pretty incredible, especially here in North Texas. That's a massive salary. Only 17% of these jobs are earning less than 75. The rent to income ratio is highly affordable compared to other top markets, as we've already talked about. It just under 23% on the Dallas side and just over 18% on the Fort Worth side. So if we look at the cost of living factor, this kind of shows you top markets comparisons and how each sector is affected by cost of living relative if you move to Dallas. So you'll see Chicago, which is the one we're going to overtake pretty soon. We're significantly more affordable. Los Angeles, of course, much more affordable. New York, San Diego. But really what this gives you an idea of is why are companies coming here? Why are people coming here? And this just kind of puts that in a different way of looking at it. So let's talk about DFW a little more as it pertains to other markets in North Texas, because I get asked a lot about Austin. Well, Austin's not doing well. Well, y'all, if you've been watching my webinars for years, I've been telling people to stay out of Austin for years, and that's because Austin is just too volatile. It does not have the backbone of resiliency that North Texas does. And despite a slowdown in activity, headline just came out, prices rose faster in DFW than in any of the major metropolitan areas in 2022. And so it's not just me talking about this. Look at what all these news articles are saying. I could plaster them up here for you, but at the end of the day, the scariest thing to me in all of this is as rates have gone up, our inventory has continued to drop. Our month supply is down below 2 average now. So when we were last talking in November, we were at 2.2, 2.3. We actually dropped our inventory last month. So although the number of homes available is going up, it is not keeping up with the number of people who need somewhere. And again, this goes back to the news and their statistics, right? Because if you watch the news, it's like listings are up 70%. Well, yeah, but we're still down 100. And so these are the types of things that require that hyper vigilant local research. And that is where I see so many people go wrong. You can't just turn on the news and get the information you need to be a real estate investor, guys. So let's kind of do the takeaway here for North Texas before I get into the numbers. We're still seeing appreciation year over year, 4 to 6% in most of the areas that we work. The median price in the hottest county, Collin County, is still sub $600,000. Home sales prices are up 45% in the last 3 years. The average home value for the metro is just over $361,000. And I will remind you that that is for the 4th largest market in the United States. 2 months of inventory as of the February 2023 numbers that just came out. That's scary. Remember, a healthy market's about 6 months. 26% of our sales are still over list price, 23 days average depending, and a 99.3% average sale to list ratio. 2 metros were ranked among the top 10 with TAR and NAR. So essentially their economist came out and said, here's going to be our top 10 markets for 2023. Lots of markets dropped off that list. North Texas remains. So what they're expecting is home prices to climb at least 5% in 2023, keeping in mind they're anticipating rates to continue to rise. And then in addition to that, they're expecting a 7% increase in 2022. And we pretty much hit that right on the ball. I think we were right over 7%. He predicts foreclosure rates are going to remain at historical low levels, less than 1% of all mortgages. A lot of reasons for that, but mostly it's because everybody has equity. We have more equity than ever in history. So last decade, let's talk about rent growth. We've grown 64% rent growth in the last decade. Rents are up over 26% in the last 30 months. And the rental home days on market are still lower than January 2020 going into COVID. 59% of our people are renters. It's an incredible, staggering statistic. It's not because they can't buy, guys. It's because they don't want to. We have a population that just really doesn't want the responsibility of home ownership. Lots of people moving here. It's really overwhelming coming from another state to move to Texas, and especially North Texas. There's so many suburbs, they don't know where they want to go. We do have the highest occupancy and rent increases in Texas. So another way to compare the top markets in North Texas against other parts of Texas is you can see we're at 92.2%, Houston's at 90.6, San Antonio 90.4, Austin 90.8. DFW rents are up 6.3% year over year. We blew everybody else out of the water. Again, it just goes back to strength and resiliency. And you can even see, so the Federal Reserve Bank here is forecasting rent growth from 5.8 all the way up to 8.4. And Moody's is forecasting over 5 to 7%. So again, pretty much everyone's in agreement on what our market's going to do. The question's going to be, are we going to meet it or exceed it? Now, a lot of things that are happening here, people don't even know are happening. So let me get you up to speed. There is a new airport that is virtually pretty much solidified at this point. It still has to pass and be voted on for the bond, but it's going to happen. And unfortunately, it's 3.5 miles from my 35 acres I'm building my new house on. But hopefully, I'm going to like the sound of airline traffic, and hopefully my windows are going to keep that noise to a minimum. But here it is. This is the new McKinney National Airport that we are expecting. There's already an airport there. What they're looking to do is do an expansion, and it will basically become a new Love Field. This is going along with, I'm going to show you a road expansion project that is going to significantly open up these northern areas. So what they're anticipating is within the next 3 years, this terminal is open. And you'll see the North McKinney location here is going to feed Greenville, Sherman, Denison, all those areas that we talk about. So this is kind of some renderings of what they're looking to do. 144,000 square foot terminal, state of the art, 4 gates, dining and retail, 2,000 parking spaces. So this is the new 380 bypass and spur 399. The point of me showing you this, and I'm going to show you the next slide here in a moment, is I want you to see how they are interconnecting these outlying areas. So here, if you look at what's happening right here, this is the new Collin County Outer Loop, and this is going to be a new tollway that is going to completely connect the northern and eastern areas of our metro. And essentially the goal is these outer areas that are developing and having this massive, massive growth have easier access back into the city without having to take just the 2 highways that feed it right now. So this is already in process, and you'll see the different areas that they are working on here. Now, let's talk about Grayson County. You guys know this is my top pick, and this is where a lot of you are invested. So I want to get you up to speed on, there's no word but incredible things that are happening up there. So let's talk about it. So I told you Silicon Prairie, Silicon Alley is another one I've heard, but in reality, we are the new Silicon Valley. So this is a rendering of the new TI plant that's going on. If you haven't been here, come drive by, come take a look at what's going on up there. It's as far as the eye can see. So Sherman, a city of 45,000, has landed 2 multi-billion-dollar projects, which are essentially making it the new semiconductor manufacturing hub. And keep in mind, this all happened before the new Senate bill pumping all that money into chip manufacturing here in the United States. So here are the key takeaways of that market. 5.2% is the 1-year forecast they're anticipating, a 97.8% median sale to list ratio, 18.1% of sales over list price, and a 10.8% 1-year average home value increase. Pretty incredible. So let's talk about this TI plant. With $30 billion investment, I told you earlier, this was the largest private sector development project in Texas history. 4-factory semiconducting campus. And I love this quote from the mayor. Sherman has spent years building a business-friendly climate and laying the groundwork to support large employers. I've been telling you guys this was coming. If you've been following me for years, I told you Sherman was going to have this happen. I told you more employers were going to come in. I didn't have a crystal ball. It just made logical sense. When one big company goes up there, the companies they work with are going to follow. They're not going to stay behind. It's cheaper for them to operate in closer proximity to the companies that they work with. And then, of course, Lake Texoma plays a huge role because there's a massive amount of water needed to make wafers. And then Globotech came, 1,500 jobs with a $5 billion investment right next door. So Texas Enterprise Fund did a $15 million cash grant and then $34 million in tax incentives, the first wafer plant in 20 years. And then Finisar, talked to you guys about this years ago. Well, so originally they got $390 million in 2017, and then $410 million in 2021, which was originally supposed to be 2018 only. And then Laser Technology, produced for iPhones, Face ID, Memoji, Animoji, and portrait mode selfies, now is made at this facility. In big news, they just proposed a $3 billion, up to 4,000 person expansion for a new facility on its big site. The school board agreed to give an $80 million tax cap to help incentivize them to come here, and their hope is to start building in 2025, operational by 2028. So the crazy growth we're already seeing in Grayson County, we're just getting started. Most of these jobs are not even operational. TI is not, this is not, Globotech is not. It's what's to come. So all of their Apple manufacturing, side note, I love it. It's 100% renewable energy. So I promised you the pie chart for Grayson County. Here we are. Looks pretty similar, doesn't it? And the great thing is, before all the new jobs are added, the manufacturing jobs are almost 6 times the national average. So I'm gonna let you take a look at this for a second. On the left, this is Sherman. On the right, this is Denison. This is the 1-year price change and the 5-year price change. So if you were invested up here, this is likely the appreciation that you've seen. Hopefully you are, hopefully you listen to me, because this is what we have been seeing on our own investments. About 80% of my portfolio is in Grayson County. So huge shortage of entry-level homes in Grayson County. You can see that there's been a big decrease in 1-bedroom entry level and pretty stable in the 3 bedrooms. So all these new people moving here wanting your typical 3-2, they're gone. But regardless, I want you to look how low this percentage is. So population growth has been 10%, 5%. Job growth, something like 10,000 jobs in a couple of years for 45,000 people. And yet this is all the housing that we're adding. Median list price almost 340,000. So despite massive population growth, this is what we were talking about, right? The news will tell you that, well, listings are up 100%, but they don't tell you how much it's still down. I want you to take a look at total listing count in Grayson County. We're not above where we were pre-COVID. We haven't even accounted for all the people who've moved in and all the extra houses we need now. We're barely touching where we were in 2019. And of course, home developers are now coming. So Centurion just bought a massive plot of land that they're going to be developing into a master plan community. And I won't talk too much about this, but it's right next to where TI and all that's happening. And so even the big developers are now coming up here, which they've been lagging. It's time they do. It was more effective for them to build a little bit further south because they could charge a whole lot more money. Sherman Denison is still significantly undervalued for what it could be. So that's my North Texas market update. For those of you who just wanted to hear what's going on, you are welcome to hop off. I'm going to talk to you a little bit about what opportunities we have right now and some of the things that we have upcoming in these areas. So first and foremost, for those of you that are looking for a passive way of investing, we do have our real estate investment fund, and I'm going to give you a little update on that because I know some of you are invested that attending today. This is not an offer to sell nor a solicitation of an offer to purchase securities. This offer is only made through our PPM, and the strategies may or may not be appropriate for everyone. Always consult your advisor and or attorney to discuss your specific situation. And of course, past performance is no guarantee of future results. And while every effort is made to maintain accurate and current information, the possibility of errors and or updates always exists. This is an accredited investor only fund. And I won't go into too much detail of what that is, but if you're not yet an accredited investor, reach out. Let me help you get there. It's a lot easier than what you think, but certainly what we do on my OmniKey Realty side is get you to a point where you can invest in funds like this and get your net worth up. And that's one of the great things about leveraging real estate. And that's a class for another day. Of course, I'm not going to go into that today, but very, very important. If you're not there yet and you want to get there, you want to build that portfolio, that's what we're here for. We're here to help you do that. So status right now, we have a lot of property. We've closed on 15. And so total, we're going to have 17 single family, 1 multifamily. We have 9 single family in Sherman, a duplex in Sherman, a single family in Gainesville, a single family in Greenville, a single family in Farmersville, and 5 single family in Denison. Of those, we only have 3 single families left to close, and that's by March 31st, 2023. I think we have another $250,000 coming in this week, so we'll go buy a couple more this week. The fund is still open. It will be open until November, and great opportunity there. A lot more things you need to know. So you can go to the website growdevelopments.com, or you can reach out to me at any time to discuss more details about that. And in terms of our off-market property, for those of you who don't know, we do have a real estate firm who works as your agent. We do not own the properties that we are selling you, so any equity capture is yours to keep. And our model does revolve around people typically starting with new construction for consistent income, and everything is under one roof. So I'm not going to go into this too much. Most of you already know what we do, but if you have questions, you can feel free to reach out and we can discuss that separately. So our goal is a 2 to 6 year hold model, and that is with integrated property management. And this is how I built my portfolio, and it is how we help you build yours. Whether you're doing it with me or whether you're doing it with someone else, make sure that you are getting education on how to monitor your assets on a quarterly basis at a minimum, and how to know when it's time to sell, 1031, or cash out. That's one of the biggest things that we discuss at our event, how to get your portfolio as large as possible, as quickly as possible. And so if that's something that you're interested in, that is at our free event. And then of course, our continuing webinars going over these things for you. Again, not every strategy works in every market. That 2 to 6 year model works great in mind to keep doubling your portfolio, may not work in others. So just keep that in mind. So these are just some of the off-market properties we have right now. We have a lot of off-market new construction right now. This one is a really cute one right over, not far from where TI is. This is a 3-bedroom, 2-bathroom, 1-car garage for $235,000 brand new construction. This one will be completed in May, just over 1,260 square feet. Super cute house, and I love that it has a garage. For those of you that have been watching Grayson County, it's really hard to get garages up there with lot sizes. And so anytime we get one of these with a garage, we love to see that. This is a brand new construction duplex. This one is the deal of the day for sure. New construction duplex for $404,000. Each side is a 3, 2.5, 1,338 square feet. Estimated rents $3,200 to $3,300. I will tell you, this is the lowest price I've seen on a duplex like this in quite some time. Some of these are already tenant occupied as well. And so we had quite a few of these available. We're down to the last couple. So if you're interested, I do recommend you reach out as soon as possible. This is one of our top builders who built this property, and they're fantastic, and they're huge on both sides. To find a duplex like this for this price, I mean, you're talking almost 2,700 square feet here. So love that one. Greenville, this is a 3-bedroom, 2-bathroom, 1-car garage, almost 1,300 square feet for $235,000. Super cute. Went by these, they're fantastic. These are going to be completed in July, so great timing for that property tax incentive at land only value. Lets you save quite a bit of money your first year typically, because they can't assess it at full value. And again, they can't really see what you pay for things. That's not reported here in Texas. And so we often see a lot of benefit at the beginning of ownership. If you haven't watched my webinars on that, feel free to reach out. I can send you some education on why we do new construction and how we see that increase your returns up to 50%, especially over a shorter term hold, 2 to 6 years. Makes a huge difference. A lot of people don't realize how much that property tax benefit makes a difference in the beginning of ownership. Here's a 322, very hard to find in this price point. 1,253 square feet. This one's 240, and this is another July completion. Now, I want to remind you, the average price point in these areas is about $340,000 right now. So when we're talking about these homes in the low to mid twos, that's going to present opportunity for you. And so again, you want to do your own due diligence. We can certainly provide you more details on each of these properties, but this is just a sampling of some of the off-market opportunities that we have right now, new construction with warranties. Finally, we opened in Oklahoma, some of you know, and this is all Southern Oklahoma, piggybacking on that same growth of TI in all of these areas in Sherman and Denison. So this is about 3 minutes over the border in Calera. This is a half-acre property for just under $230,000, 3-2 with a 1-car garage, just over 1,230 square feet. There are only 2 of them at this price. The next batch will be about $20,000 more, I'm told. So good opportunity to get in at the beginning of this neighborhood. Super cute homes, one of our top builders as well. So if you want to book a call with our investment team, you'll have that QR here on the left, or if you want to join our bus tour, that will be April 15th from 10 a.m. to 5 p.m. We will be back promptly at 5. For those of you that want to fly out on Saturday, you will be able to make an afternoon or late afternoon evening flight. Other than that, if you want to schedule a consultation with me, you can use this here, or feel free to reach out. You can reach us at info@slaughterinvesting.com, or most of you, of course, have my personal email address as well. We're always happy to help you and consult with you to help you on your investment journey. Again, our mastermind will be on Sunday, April 16th, and our event will be the 14th and the 15th for the free event, the after party and the bus tour. Hope to see you guys there. Again, QR code to sign up for that after party. We'll have lots of our experts there, top real estate investors, myself and Michael, and lots of attendees. And then again, if you want to learn more about our Sunday mastermind one-on-one with Michael and I and other investors, feel free to reach out and we'll give you that information as well. Otherwise, I hope you'll stay connected with us, keep watching our education, hopefully attending our events, and whatever else you do, don't listen to the news, do your own research. Don't get overly worried about what's happening in other sectors. Real estate is a very different beast. If you have questions, you can always reach out. The best advice I'll give you today is look at where your bank is, look at where your cash is positioned, and make sure that you are protected, because at the end of the day, you're going to want that cash. And so I will tell you, the biggest takeaway to take from what's happening right now is just look at everything you have. Look at your real estate, look at your equity, look at your cash assets, look at the banks that you're at. Make sure that you are making smart decisions to diversify and to protect yourself. I personally have put a lot of my money back into the big banks. Is that a positive or a negative? Who knows? But at the end of the day, I talk to my bank that holds the majority of my money, and their loss on these same types of papers that killed SVB is less than 1%. And so these are the types of questions you should be asking. Is that a fail-safe to guarantee there won't be an issue? No, of course not. Anything is possible. But at the end of the day, you can ask those pointed questions and make sure that you feel comfortable with what's going on right now. But I do think, everything else aside, we saw very strategic companies that went under because of their mismanagement and their bad decisions and the rising interest rates. And this is not something that you should be looking at just one time, guys. You should be looking at your assets, looking at your properties, looking at where your money is, looking at your stocks constantly. I do mine monthly. I teach people to do it quarterly. And so let this be a lesson to those of us who didn't do that, to make sure that we are doing those things and taking protections in the future so that we are setting ourselves up for success. I hope everyone has a wonderful weekend. I'll see you guys next week, and I hope to see you in April. Take care.